This video is based on the technical analysis of Ger40, which is also known as Dax40. And at this time, we're on the monthly chart. And what we'll do in regards to Ger40 is identify the market structure, market patterns that we should be paying attention to, key support and resistance levels, important candlestick patterns, as well as levels at which we should be looking for those potential buying and selling opportunities. So without wasting any further time, let's get straight into the actual technical analysis. And as I said, we're on the monthly chart, and remember also that we're starting a new month. We're now in July, and we can see that the current, or rather the previous month's candlestick, actually closed as a reversal candlestick, right? As you guys can see, it's a pin bar. And to add to this, the chart is telling me that we're probably getting ready to see a reversal of sorts. Why do I say so? That is because if you were to look at this area over here, you would see that we had this huge M structure, right? And we can also see that the market at this point in time is in the process of giving us a double top. And as I said, what this probably means is that we may see a situation where the market moves further down to around this level, in line with that level, which is exactly where it started. So we may see Ger40 crashing over the next couple of weeks and even months due to those reasons that I've just mentioned. To add to this, I also want to mention that we had, if you look here, an M structure, right? And you guys know that whenever we have these M structures, what normally happens is that a lot of traders and investors usually sell on the second leg of that M structure, and they place their stop losses just above. So it may be that this current month's candlestick is actually going up to trigger some of those stop losses, and then we may potentially see the market continue to move further down, right? Anyway, let's zoom in and see what exactly is happening. And from here, what I will do, guys, is head down to the weekly chart, and here we are on the weekly chart. On the weekly chart, we have another factor that motivates for why I say that we may potentially see the market move further down, right? And just to recap, guys, remember on the monthly chart, I spoke about how we have this huge potential double top or M structure. But if we can just zoom in, we can see that on the weekly chart, we also have another M structure over there. I hope you guys can see that, right? And it also has a neckline at that point. And ideally, we want to see price actually break into the bottom side of that neckline, coming back to the neckline to give it a test. And at that point is generally where we would look for those potential selling opportunities, right? Nonetheless, at this point in time, as we speak, a lot of traders and investors have already sold at this level over here. Why do I say so? That is because we have this candlestick pattern over here, where we have a bullish candlestick as well as a huge bearish candlestick, and this pattern is a bearish engulfing candlestick pattern, right? And it's a reversal candlestick pattern, and that's the reason why I'm saying a lot of people have actually started to sell and place their stop losses just above, right? So as I said, that's another reason why I say that we may potentially see the market actually move further down, right? Also, another thing I want to mention is that if you look here, we may potentially have a gap there. And remember that gaps are liquidity areas, and whenever we have gaps, we have a lot of money stacked there, and this tells us that we may see a situation where the market comes to this level, at least to trigger, or rather to grab some of that liquidity, right? Anyway, what else do we see in regards to the weekly chart? So as much as I'm saying that we actually have this M structure over here, I want you guys to see that we also had a W structure over here. Can you guys see that, right? And we know that whenever we have these W structures, we want to see price also breaking to the upside of that W structure, coming back to the structure to give it a test, and at that neckline is where we look for those potential buying opportunities. And we can see that that's exactly what happened more or less here, where we saw the market at this level breaking to the upside, coming down to the neckline, and at this point we may potentially see the market move further up. So what I'm saying, in other words, is that at this point in time we have a bit of a dilemma. Why do I say so? Number one, as I said, we have this W structure, right? And number two, we have this M structure. And we have two opposing structure that share a neckline. So what this means is that actually buying or selling within this region is a bit risky. Buying or selling within that region is a bit risky. My bias at this point in time is to look for selling opportunities. Nonetheless, we need to acknowledge that, as I said, guys, we had this overextended W structure, which has a neckline at that point. And for all we know, what could possibly also happen is that, as I said, the market could come to this level only to continue to push further up. So we just need to be careful. So how do we get around this dilemma? In my very, very humble opinion, because we have, as I said, this W structure as well as this opposing M structure, which both share the same neckline, or which both have their necklines in more or less the same area, the best thing to do and the safe thing to do is to wait for the market to actually close. That is, if we're looking for selling opportunities, wait for the market to close below this neckline, right? And then for it to close below this channel as well. And once that happens, then we can look for those potential selling opportunities. But as I said, ideally we would love to see price, right, breaking to the bottom side of this neckline, coming back to the neckline to give it a test, and at that neckline is generally where we should be looking for those potential selling opportunities, right? Anyway, what else do we see in regards to the weekly chart of Dax40? At this point, I don't see much. I'm just going to head down to the daily chart, and I'm just going to zoom in again, right? And let's see what's happening on the daily chart. And just to recap, guys, remember, just to recap, on the weekly chart, we spoke about how we have this overextended W structure. And by the way, it is an overextended W structure because that first leg is much higher than that second leg, right? And we had also spoken about how we have this huge M structure, which also has a neckline at that point. And we said the safe entry at this point is to allow the market to actually close below this neckline as well as this trend line. Then we can look for those potential selling opportunities, right? But here we are on the daily chart. What do we see on the daily chart, right? I'm just going to zoom in a bit and let's have a look. On the daily chart, guys, we can see that we have this candlestick as well. And what that candlestick is a liquidity candlestick. It is a small bullish candlestick which has quite a long upper wick, and it tells us that at the top there where that wick ends, we have a lot of liquidity stuck there. And what may possibly happen is, as much as I'm saying that we should be looking for those selling opportunities, we may see the market actually move further up to grab that liquidity, and then only the market may potentially move further down. And that is because, as I've said, these candlesticks actually carry a lot of money where they end at the top, and the market may just go up to grab that money and then go down. Also, remember I spoke about whenever we have these M structures, right? What normally happens, as I said, guys, is that a lot of traders and investors buy or rather sell on the second leg of that M structure, and they place their stop losses just above. So we may have a situation where the market actually moves further up to grab the liquidity associated with this candlestick, as well as to grab the stop losses that are located in and around this area, and then the market may then move further down. That is why I'm saying that the best thing to do at this point in time is to actually wait for the market to close below this neckline and below this channel, and then we should look for those potential selling opportunities. But what else do we see on the daily chart that we should be paying attention to? On the daily chart, I can also see that we have another gap over here, right? And that gap also means there's a lot of money stuck there, and it actually explains why actually we're seeing this entire move to the upside. It may be a stop hunt, and as I said, could be to grab the liquidity associated with this candlestick over there, as well as to grab those stop losses that are located over here due to that M structure. And because we have another gap here, the market may go up to grab that gap as well. So there is a lot of money stuck in and around this region, and it may be that before we actually head down, the market may go up to grab all of those liquidity points, right? Another thing that I also want to mention is that if you look at this area over here, we actually have this candlestick over here, right, as well as this one. Both candlesticks are bearish candlesticks with small bodies and long lower wicks, right? And as I said, guys, these also tell us that we have a lot of money stuck here or at those levels, and that the market needs to head down at some point to grab those levels, right, or those liquidity points, right? Anyway, what else do we see? We have another one also over here which is carrying a lot of liquidity. So what I'm saying in other words is that there is plenty of scope for the market to move further down to grab some of those liquidity points, and this may happen in the form of an M structure, as I said, guys. Or what may possibly also happen is we may actually see a situation where the market actually gives us a triple top as opposed to a double top, right? With the side being the left part, this being the center part, and this potentially in the future being the right hand part. It would still have a neckline over there, and my very humble opinion would be to wait for the market to close below the neckline as well as this channel. Then we can look for those potential selling opportunities. Although I know a lot of people are going to be looking for those selling opportunities at this point, and that's for people that are not scared of risk, right? Anyway, what else do we see? At this point, I don't see much. Let's head down to the H4 chart and see what's happening down there. H4 chart, just bear with me. Let's have a look. Here we are on the H4 chart, right? And just to recap, guys, remember on the daily chart we spoke about how we had this huge M structure, and I said to you guys that at this point over here we actually have a gap, and that a lot of traders and investors actually sold at this point due to the fact that we have this double top. And I also said that at the top around here somewhere we have a lot of stop losses stuck there, and we may see a situation where the market moves further up to grab those stop losses and then potentially moves further down. I also spoke about how we may potentially get this structure over here, right, which would be a triple top, right? And I also said that in as far as looking for those potential selling opportunities goes, we should look for them once the market closes below that neckline as well as below this channel over here, right? Anyway, let's zoom in and see what's happening on the H4 chart, right? Here we go on the H4 chart. On the H4 chart, we can see also that the market had given us a W structure over here, and just like with M structures, whenever we have these W structures, we want to see price breaking to the upside of that neckline, coming back to the neckline to give it a test, and at that point is where we look for those potential buying opportunities. So this W structure has a neckline at that point, more or less. Price broke to the upside, came back to the neckline to give it a test, and at this point a lot of people actually bought, and we may see the market actually move further up, as I said, to this level to close this gap, as well as to trigger the liquidity associated with that liquidity candlestick, and also to possibly grab those stop losses that I spoke about that are associated with that huge M structure that I spoke about earlier, right? But in as far as buying or selling opportunities at this point, I don't see any. Although I also want to point out that if you look here, the market is at this point at a very strong level of resistance, and as much as I'm saying that we may see a situation where the market moves further up to grab all of those liquidity points, we may actually see a situation where the market actually from where it is moves further down. Why? That is because, as I said, guys, we're at a very strong level of support, or rather resistance at this point in time. To add to this, I hope you guys can see that we had an M structure over here, which also had a neckline at that point. And remember, guys, I said to you guys that whenever we have these M structures, we want to see price breaking to the bottom side of the neckline, heading back up to the neckline to give it a test, and at that point is where we look for those potential selling opportunities, right? But in as far as buying or selling opportunities at this point, I don't see any, and I've already shown you where to look for those potential selling opportunities. But we may see a situation where the market moves further up to grab all of those liquidity points and then crashes down. But in conclusion, I want to mention that if we can just go back to the bigger time frames, right, and zoom out, I would say that DAX is giving us signs that it's getting ready to crash, right? And that is because, as I've said, we have this huge M structure, and this could be the second leg of that M structure on the weekly chart, and the market may continue to move further down.